TSMC Q4 2025 Earnings Call Summary. Good afternoon, everyone. Today, we're summarizing TSMC's fourth quarter 2025 earnings call. The company delivered a strong quarter, showcasing robust demand for its leading-edge technologies and setting an optimistic tone for the future. Financial highlights for Q4 2025. TSMC reported a sequential revenue increase of 5.7% in NT dollars, reaching TWD 33.7 billion in USD terms, a 1.9% increase. This growth was driven by high demand for their advanced process technologies. The gross margin saw a significant improvement, increasing by 2.8 percentage points to 62.3%. This was attributed to cost improvements, a favorable foreign exchange rate, and high capacity utilization. Operating expenses remained well managed, and the operating margin increased by 3.4 percentage points to 54%. Earnings per share, EPS, stood at TWD 19.5, with a return on equity, ROE, of 38.8%. Technology and platform performance. The 3-nanometer process technology was a major contributor, accounting for 28% of wafer revenue. This was complemented by 5-nanometer, 35%, and 7-nanometer, 14%, technologies. Advanced technologies, 7 nanometers and below, represented a substantial 77% of wafer revenue. On a full year 2025 basis, advanced technologies grew to 74% of total wafer revenue, up from 69% in 2024. By platform, high-performance computing, HPC, led the growth, increasing 4% sequentially and accounting for 55% of Q4 revenue. Smartphones also saw a strong 11% increase, contributing 32% of revenue. IT and automotive made up 5% each, while digital consumer electronics, DCE, was a smaller segment at 1%. For the full year 2025, HPC showed remarkable year-over-year growth of 48%. Full year 2025 recap. For the full year 2025, TSMC achieved significant revenue growth of 35.9% in US dollars, reaching TWD 122 billion, TWD 3.8 trillion in NT dollars. Gross margin improved by 3.8 percentage points to 59.9%, and operating margin increased by 5.1 percentage points to 50.8%, reflecting strong operational leverage. Full-year EPS grew by 46.4% to TWD 66.25. Capital expenditures for the year were TWD 1.3 trillion, 40.9 billion US dollars, leading to a free cash flow of TWD 1 trillion, up 15.2% from 2024. The company also increased its cash dividend per share to TWD 18 for 2025, with a commitment to at least TWD 23 per share in 2026. Guidance for Q1 2026. TSMC forecasts first quarter 2026 revenue to be between 34.6 billion US dollars and 35.8 billion US dollars, representing a 4% sequential increase or a 38% year-over-year increase at the midpoint. Gross margin is expected to be between 63% and 65%, and operating margin between 54% and 56%. The effective tax rate for 2026 is projected to be between 17% and 18%. Key messages from management. CFO Wendell Huang. Profitability outlook. Q4 gross margin exceeded guidance due to cost improvements and favorable FX. Q1 2026 guidance reflects continued cost improvements and higher capacity utilization, partially offset by overseas fab dilution. 2026 puts and takes. Anticipates moderate utilization rate increases, within 3 gross margin crossing over to the corporate average. Overseas fabs will continue to dilute gross margin by 2 to 3%, widening to 3 to 4% later. The initial ramp-up of 2-nanometer technology will also dilute gross margin by 2 to 3% in 2026. Capital budget. For 2026, the capital budget is projected between $52 billion and $56 billion, with 70 to 80% allocated to advanced process technologies. Long-term profitability aims for long-term gross margins of 56% and higher, and ROE in the high 20s through the cycle, despite increasing manufacturing costs for leading-edge nodes and global expansion. Chairman and CEO Dr. C.C. Wei, 2026 Outlook, forecasts the Foundry 2.0 industry to grow 14% year-over-year, with TSMC expecting revenue growth close to 30% in US dollars, driven by strong demand for leading-edge and advanced packaging technologies. AI demand, confident in the multi-year AI megatrend, with AI accelerators accounting for high teens % of revenue in 2025. Expects a mid to high 50s % CAGR for AI accelerators from 2024 to 2029, and an overall long-term revenue growth of around 25% CAGR for the 5-year period starting 2024. Global manufacturing footprint, accelerating expansion in Arizona, with the first fab in high-volume production and plans for a second and third fab, plus an advanced packaging fab. Also providing updates on progress in Japan and Germany, while continuing investment in Taiwan. N2 and A16 technologies. N2 entered high-volume manufacturing in Q4 2025, with strong demand from smartphone and HPC AI. N2P is scheduled for the second half of 2026, and A16 volume production is also on track for the second half of 2026, expected to propel the N2 family as another major node for TSMC. Significant risk factors and highlights. Highlights: strong sequential and year-over-year revenue growth driven by leading-edge technologies. Significant improvement in gross and operating margins. Robust demand for HPC and AI-related applications. Successful ramp-up of N2 technology. Aggressive capital investment to support future growth. Positive outlook for AI megatrend and long-term revenue growth. Expanding global manufacturing footprint to meet customer needs. Lowlights/challenges. Gross margin dilution from overseas fabs. Initial ramp-up of 2-nanometer technology diluting gross margin. Increasing manufacturing cost challenges for leading-edge nodes. Potential impact of tariff policies and rising component prices on some end markets. Tight capacity for AI-related demand. Need to secure sufficient engineering talent for expansions. Most important statements. Dr. C.C. Wei on AI demand. Our conviction in the multi-year AI megatrend remains strong, and we believe the demand for semiconductors will continue to be very fundamental. He also emphasized that TSMC's first responsibility is to fully support customers with advanced technology and capacity. Dr. C.C. Wei on competition. Responding to concerns about Intel, he stated, "No, we have confidence to keep our business growing as we estimate," highlighting TSMC's decades of experience in competition and the long lead times for technology development. Wendell Huang on long-term profitability. By earning a sustainable and healthy return, even as we shoulder a greater burden of CapEx investment for our customers, we can continue to invest in technology and capacity to support their growth while delivering long-term profitable growth to our shareholders. Dr. C.C. Wei on capacity. The capacity is very tight. We work very hard to narrow the gap so far. Probably this year, next year, we have to work extremely hard to narrow the gap. In conclusion, TSMC delivered a stellar Q4 2025, with strong financial performance and a clear strategic vision for continued growth, particularly driven by the AI megatrend. The company is making significant investments to meet this demand, while also navigating global expansion and technological advancements.